Iraqi Dinar revaluation sets the stage for a new economic chapter. Welcome to Iraqi Dinar, RV, your trusted source for timely and insightful updates on the ever-evolving world of currency markets. In a development that has captured the attention of financial analysts, institutional investors, and economic policymakers worldwide, the Iraqi Dinar has undergone a game-changing revaluation. As of May 2020, two major U.S. financial giants, Wells Fargo and Chase Bank, have formally adopted a fixed exchange rate for the dinar, initially set at $3.86 and later adjusted to a stronger $4.56. This bold move is widely considered a turning point for Iraq's financial system and global perception. From speculation to stability. For years, the Iraqi dinar has been the subject of intense speculation. Its value has often been the focus of heated debates in investment forums and geopolitical discussions, mainly due to Iraq's complex political environment and uneven economic growth. The announcement of a fixed exchange rate, especially by prominent banks like Wells Fargo and Chase, signals a dramatic departure from the uncertainty that has long surrounded the dinar. This shift is not just symbolic. By assigning a solid and predictable value to the currency, Iraq is sending a clear message to the world. It is open for business and serious about economic reform. The introduction of a fixed rate provides much-needed clarity to traders, multinational corporations, and foreign investors, allowing them to operate with greater certainty and reduced risk. The $4.56 benchmark. A statement of confidence. The revised peg of $4.56 per dinar is more than just a number. It represents the culmination of strategic economic planning, improved fiscal management, and increasing global confidence in Iraq's ability to deliver stability. Analysts see this as more than a technical adjustment. It's a structural transformation reflecting stronger economic fundamentals, including rising oil revenues, increased foreign currency reserves, and tighter regulatory oversight. Iraq's government and the central bank have spent years aligning the country's financial systems with global standards. From implementing anti-money laundering initiatives to enhancing banking transparency, Iraq has laid a solid foundation for this revaluation. The new fixed rate is being welcomed as a stabilizing force, one that brings predictability to the costs of trade, investment, and operational planning across numerous sectors. Economic implications. Across sectors. A consistent and dependable currency rate has far-reaching consequences. For industries ranging from oil and agriculture to banking and infrastructure, it enables better forecasting and long-term planning. Multinational companies now have a clearer view of potential costs and profit margins, paving the way for greater participation in Iraq's growing economy. The fixed exchange rate also simplifies international transactions. It reduces the need for hedging strategies and eliminates exchange rate volatility, allowing importers and exporters to conduct business more efficiently. Over time, this stability can stimulate economic diversification, reduce dependence on oil revenues, and strengthen domestic industries through increased competitiveness. Turning a corner in global perception. Historically, Iraq has faced skepticism from international investors due to its history of political turmoil and economic instability. But the new peg is shifting that narrative. It signifies Iraq's entry into a phase of economic maturity and strategic foresight. Experts around the world are taking note, and the dinar is beginning to be seen as more than a speculative asset. It's becoming a viable component of global financial portfolios. Wells Fargo and Chase Bank's endorsement of the new rate adds institutional credibility to the revaluation. Their decision wasn't made lightly. It reflects thorough economic analysis, forward-looking modeling, and confidence in Iraq's long-term prospects. This move is also influencing other banks and financial institutions to reevaluate their positions, signaling broader shifts in currency portfolios and investment strategies. Preparing for long-term sustainability. While the new valuation is a cause for optimism, it comes with a new set of responsibilities. Iraq must now ensure that its macroeconomic policies align with the demands of a fixed currency system. Inflation must be carefully managed, and the government must adhere to prudent fiscal strategies. Spending must be directed toward strengthening core sectors such as healthcare, education, and infrastructure to support long-term growth. Trade balances will also play a critical role. To sustain the peg, Iraq needs to maintain at least a neutral balance of trade, ideally a surplus. This will shield the exchange rate from market shocks and speculative pressures. The Central Bank of Iraq, CBI, will be the key player in managing this transition, tasked with overseeing foreign reserves, ensuring liquidity, and maintaining public and investor confidence. Support from international institutions. Global organizations such as the International Monetary Fund, IMF, and World Bank are expected to continue supporting Iraq during this transitional phase. Their guidance will help Iraq navigate potential challenges such as oil market volatility, capital flight, or geopolitical disruptions. Strategic cooperation with these institutions can offer Iraq access to technical expertise, emergency funding, and further international credibility. This collaborative approach will be essential to sustaining reforms and building a resilient economic system. Iraq's increasing engagement with international economic organizations is already laying the groundwork for broader integration into global financial networks and trade blocs, laying the groundwork for future growth. To truly capitalize on the benefits of the revaluation, Iraq must continue to modernize its economy. This includes strengthening the private sector, digitalizing financial services, reforming judicial and administrative systems, and investing in national infrastructure. These reforms are critical to creating a business-friendly environment where innovation, entrepreneurship, and foreign investment can thrive. Improved governance, transparency, and regulatory enforcement will build trust among domestic and international stakeholders. In turn, this will attract long-term capital and facilitate the signing of bilateral and multilateral trade agreements. Iraq's geographic location, resource wealth, and growing financial credibility could soon position it as a regional economic hub. Risks and strategic oversight. Despite the positive momentum, a fixed exchange rate brings with it some inherent risks. It reduces Iraq's ability to quickly respond to external economic shocks through currency adjustments. Therefore, Iraq must build strong economic buffers, such as diversified revenue streams and substantial reserves, to maintain stability. Sound economic indicators, such as strong GDP growth, a balanced fiscal policy, and consistent investment inflows, will be necessary to uphold the peg. The government must remain flexible and ready to implement corrective measures as global conditions evolve. The central bank's pivotal role. At the heart of this transformation is the Central Bank of Iraq. Beyond managing the exchange rate, the CBI must ensure that inflation stays within target ranges, that the banking sector remains well-capitalized and liquid, and that monetary policy supports sustainable growth. The central bank's credibility, transparency, and efficiency will be the pillars upon which long-term investor confidence rests. In tandem with commercial banks, the CBI must also support financial innovation, expand access to credit, and drive sector-wide improvements in customer service and financial literacy. A new era for Iraq. Pegging the dinar at $4.56 is more than an economic decision. It's a declaration of Iraq's readiness to participate as a serious player in global finance. It signals a shift from economic fragility to fiscal strength, from isolation to integration, and from speculation to structure. The implications are vast, not only for Iraq, but for the broader Middle East region, where many economies may look to replicate Iraq's strategy. If Iraq can continue to demonstrate resilience, uphold reforms, and maintain stability, this currency peg could mark the beginning of an economic renaissance. Foreign investors, development banks, and multinational corporations are already taking a renewed interest in the country. Iraq's transformation is no longer theoretical, it is unfolding in real time. At Iraqi Dinar RV, we're committed to tracking this dynamic journey. We'll keep you informed with expert analysis, data-driven insights, and on-the-ground reports. Subscribe to stay ahead of the curve as Iraq's financial story enters this bold new chapter. Stay tuned, stay informed, and watch the horizon. Because the future of the Iraqi dinar is here.